Today's Talk About It Tuesday question is, I want to start investing, but there are so many different things to choose from. How do I decide what's a good investment for me? So I've gotten this question a lot of different ways, many, many times. And really the simple answer is, what are your goals? How long do you have? What's your time horizon? And what is your risk tolerance? But I'm going to put a totally different spin on this, because I think if I put this spin on it, you'll really understand and you can nail it down. So as you said, there are so many different things to choose from. People keep saying, oh, you got to do stocks, you got to do bonds, you got to do real estate, you got to do crypto, you got to do, right? And they're like, and these things make money. It's like you're leaving an opportunity on the table. Everything that makes money is not a good opportunity. And every investment vehicle is not a good vehicle for everyone based on their goals, their risk tolerance, their time horizon. So what am I saying? You have to create an investment goal first. Then you have to create an investment philosophy. What's your philosophy? And that will dictate your strategy. So let me give you an example. I'm going to use me. I'm going to tell you my investment philosophy, because people are always coming to me with what they believe to be an opportunity for me. But if you don't know what my goals are, you can't tell me that something's a good opportunity for me. And just because it is making money doesn't make it a good opportunity for me. My goal is not just to make money. So when I invest, and then you have to consider my age, right? I'm close to 60 now. I'm this far away from 60 now. And so my goals are different from somebody who's probably 20 years old, who's just starting out, or somebody who's 35, who has a family and has a lot of working years ahead of them. My goals now for my investments are, one, to create intergenerational wealth. That means I want to transfer wealth from me to the next generation. So I want to build up enough assets that I can transfer these assets to the next generation. That is critically important to me at this stage in my life, right? The other aspect of investing for me, the other thing that's important for me, is that those same assets produce income for me to begin to replace the earned income that I make, right? So as I begin to wane away from earned income, doing classes, doing speaking engagements, doing consulting, as I start to wane that away, how do I replace that income? I want to replace it with income from the assets that I have. So in order to create intergenerational wealth, the assets that I obtain have to grow in equity, meaning they have to grow in value, at least maintain their value. They have to grow. I want things that will grow in value, so grow in equity, but also produce income. So that means any asset that does not fit that criteria is not a good opportunity for me based on my philosophy, which dictates my strategy. So let me give you some prime examples. Real estate. I will not buy real estate for speculation, meaning I won't buy. There are some states that are just about giving away real estate, dirt cheap, because the cities are in decline and they want investors to come in and buy the properties, abandoned properties from the city, speculating that at some point in the future, when the political climate changes, when maybe a new industry comes in, maybe when certain things change, that those properties will create value in the future. But right now, it's all speculation, because those conditions don't exist for that to grow in equity or pay income. So right now, they would just be sitting there, really costing, right? Because you have to pay taxes and insurance. So that's not a good investment for me, but it may be a good investment for somebody who has a different philosophy, who has time to speculate, right? Somebody who's 20, maybe that's great for them. Maybe it's even great for the 35-year-old. It's not a good investment for me, even if I can get it dirt cheap, even if the promise of in 20 years it'll be worth something amazing. 20 years that's not good for me. So real estate, I only buy properties that pay me income right now and have enormous equity growth right now. So there's certain markets I won't touch. I will invest in New York City because we have a housing shortage, which means that equity is growing like crazy all the time and rents are sky high, so they pay income. So it makes sense for me to invest in certain types of real estate, but to leave other types of real estate alone. In the stock market, I only buy stocks that pay dividends. So there are what you call value stocks and what you call growth stocks. So growth stocks usually are these new technologies, NVIDIA, Tesla, some of these things that show this wild, amazing potential growth, but they don't pay dividends. So there's no way for me to meet my philosophy, so those wouldn't be on the table, as opposed to, say, a Coca-Cola or something of that nature that pays both, that is growing steadily, maintains value, and also pays me income. So I would never do crypto. It doesn't pay dividends. It doesn't pay, it's wildly speculative. It doesn't fit in my philosophy. There's certain things, again, I would leave off the table. So basically, once you have, right, and that eliminates a lot of things, but also gives me certain things. If it has interest income, I'll take it. If it has dividends, I'll take it. If it has rental income, I'll take it. Other than that, it doesn't fit my philosophy. It's off the table. So that's how you determine what will work for you. First, create a philosophy, then you will understand their strategy, and then you will narrow down your list to only things that make sense. So I'd love to hear your thoughts and your strategies and what your philosophy is, but please like, share, subscribe, keep the questions coming, and I'll see you.